Hey there, good morning everybody. Hope you're all doing well. This morning I'm going to do a video on yesterday morning's ES Slinky trades, and then I'll talk a little bit more about the double stochastics for those of you who have attended one of my most recent webinars, so this way we can follow up a little bit. So let me flip over and we can get started. Okay, so here's ES. I have it on a 4 range, and just ignore the lower indicator here. We're testing something, so just ignore that. And then, of course, these are the double stochastics that we use for just about everything. And I'm using Gordon's version just so it will mark, what direction we're looking for here, and marks the 40-point spaces between the two stochastics. And if you're interested in more information on that, he sells them really inexpensively on my site. You can look under Gordon's under the tab for Gordon's indicators, okay? All right, so here's where we open, right around here, 9:30. And here you can see we actually get a setup. You can see the bar closing above the super trend stop here. And if you look at the stochastics at that time, we've got that 40-point gap. So this 40-point gap generally on a range chart is going to give us a heads up that price is going to go sideways while the space fills, or move in whatever direction the green line has to go toward the red. So in this instance, you could see the green line would have to move toward the red to catch up to the red line. And so that would mean price will either go sideways or move lower while that space fills. And so let's say that this were a little later. I wouldn't suggest doing this right off the open, but let's say that you see price coming up to a resistance area and you have that 40-point gap. You could short that off of the resistance area, anticipating down to support, because likely price is worst case going to go sideways, best case it's going to move in the direction lower. Here we get a setup. Oops, wrong line, sorry. Can't see on my keyboard here. Here we go. Closes below the super trend stop. Stochastics in line to take that short. So if we take that short, we would be looking down to the next area of support as our target area. And I would suggest, looking to the left, you can look to the left on this chart and just mark swing highs and low areas, or use an indicator that does it, or reference a larger chart like a 5-minute or a 15-minute and just have an idea of where support would be, so you can use that as a target area. So you're not sitting there waiting for a runner and you're taking a short into a support area anticipating a bounce. So in this instance, this would be the 200 EMA here, the red one. So if I was taking this trade, I would look for a reaction at the 200 EMA, and then if it got through there, then I would be looking at the market profile VWAP down here. And you can see price bounces here, and you can see this is a general area of previous support, right? You can see it here, you can see it here. So when this retraces up here, holds it as resistance, you get your 40-point gapper, you could short off of that area. Now, the timing of the day is going to be important. If you're looking for a support resistance area to hold right in front of news, that's a pretty risky trade, because we know the news can set the market moving in one direction or the other. So you want to be cautious about when you're anticipating support and resistance areas to hold. Here we get a buy above the super trend stop, stochastic in line for it. So in taking this trade, I would be looking for a possible reaction up here at 18.25. And then I would be looking, if it gets through there, then I would be looking for the target area up here at the fair value area high. And not just because it's the fair value area high, if you look over here to the left, you could see that this was an area where we did have some support and resistance if you look at pre-market. So you'll find that if you're watching support and resistance areas, or floor trader pivots, or Fibonacci lines, whatever your methodology is for knowing areas of support and resistance, you're going to find that very often they're confluent with each other. Here we get a short. I would pass on this because it's right into this support area. And then also I have the volume profile on a bigger chart, so I can see where the high concentration of volume areas are. So if you're shorting into a high volume node area, then likely price is going to, react there, or, buying into a high volume node area. So, but when we look at this trade here, you can see we get our 40-point gapper. So this is telling us if I take this short, price is likely to go sideways or bounce while this fills. And you can see it worked out. You would have gotten something out of it, but you don't have to take every single trade. If the market's moving too fast, then like these bars are forming very quickly and you can't get in the trade, then use a bigger range chart. You'll have fewer closes above and below the super trend stop, but that's okay. And then generally I'm using the opposite super trend stop as my initial stop area. So for example, if I took this buy here, I would start out with my stop under the super trend stop here and then move it, as price begins to move. You can put your stop under a high volume area or under a support area, whatever you're comfortable with. And then here we get a short. I keep grabbing that horizontal line instead of the vertical. Here we go. Short here, it's in line, right? So if we take that, I would be looking, just because of this last area here where we got our little swing low right here, I would be cautious if price couldn't get through that, because that's also the 200 EMA. And then if it can get through that area, then I'd be looking at the VWAP, and then I would just be looking, somewhere around this last swing low as the possible next target area. And then you always just look to the left on a bigger chart to come up with those possible target areas. Here we get a buy, closing above the super trend stop. Everything's in line, right, with the stochastic, green above the red. So I could go ahead and I could buy that. This one I would be a little iffy on, just because it's into the VWAP here, it's into the 90, it's into the 200. So in looking at this, I would think that it would probably have a little difficulty getting through there. I'm not saying that it can't, but I have to be willing to sit and wait. And then another option is, once you take it, if it's not going anywhere, you just get out, or you take, whatever you can out of it, a point, looks like maybe a point. And you can see it does trade back up to the last area of this swing high right here. And so if you had a little patience, it did work out. And then so when price gets up there and it's holding resistance, if you're somebody who is able to spot divergence, I would definitely urge everybody to practice. You can see I get higher highs here than here, while on my green lines on my stochastic here, I get a lower high here than here as it's hitting resistance. So that's giving me a heads up that it's going to probably pull back at least a bar or two off of that area. And then you can see it does pull back. And then that pretty much would be it for me. I don't trade past 11:30, and most recently I've taken some time off from the room, so I'm actually getting my trading done much earlier in the day now, while I'm taking a break. And then here we get a short, doesn't really go anywhere. You can see this little congested area here, it doesn't quite tag it. And if you didn't take anything off while it was hanging here, then realistically you got stopped out here. All right, you guys, I hope that you find that helpful. And if you have any questions, feel free to shoot me an email. I hope you all have a great day. Take care.